Two investors take the exact same financial leap with vastly different outcomes. One builds an empire, while the other loses their life savings overnight. The difference isn't luck, it is a hidden layer of preparation. Welcome back to Mr. Net Worth, your guide to strategic wealth building. Today we are exploring the thin line between brave risks and reckless gambles. Many people think taking risks is the only way to get rich. While true, taking a risk unprepared is a recipe for disaster. Calculated risk is a bridge. Reckless risk is a blind leap. In this video, we will look at the signs of readiness. We will also expose the warning signs that you are gambling. By the end, you will have a clear self-check framework. This framework will protect your capital while maximizing your upside. Before you put another dollar on the line, look closely. Are you actually ready, or are you just feeling lucky? Let us look at the first sign of genuine financial strength. It starts with your defensive wall against the unexpected world, a wall built to survive any sudden storm or emergency. Let us dive into the 5 signs you are ready. These signs separate the wealthy strategists from the desperate gamblers. Pay close attention to how many of these you possess. First, you have a fully funded emergency reserve cash account. This reserve covers at least 6 months of living expenses. It sits in a safe, liquid account, untouched by investments. This fund is your shield against sudden job loss or illness. Without it, you are forced to sell assets during downturns. Selling during a market crash locks in your heavy losses. With a fortress, you can let your investments ride out storms. You do not worry about rent because your cash is secure. This peace of mind allows you to think long-term. A strong defense is the foundation of any offensive play. Second, you have a highly stable, predictable primary income source. Your monthly cash flow is consistent and covers all needs. Risk-taking requires a steady stream of capital to absorb shocks. If your main income is volatile, adding risk is dangerous. A reliable paycheck acts as a shock absorber for setbacks. It allows you to buy assets consistently through dollar-cost averaging. You do not rely on your investments to buy groceries. This independence keeps desperation out of your trading decisions. Desperate investors make emotional mistakes that cost them everything. A stable career is your ultimate wealth-building engine. Third, you have defined a clear, written investment goal. You do not just buy, you know when to sell. An exit strategy is just as important as an entry. Having a target price keeps greed from ruining your gains. It prevents you from holding a peaking asset to zero. A plan ensures you control the asset, not vice versa. You know exactly why you bought and when to leave. This systematic approach removes emotion from the entire equation. If the plan changes, it is based on data, not fear. A map is useless if you do not follow it. Fourth, your personal balance sheet has zero high-interest debt. You do not carry balances on credit cards or loans. Paying off high-interest debt is a guaranteed return on investment. No asset can consistently beat a 20% interest rate. Investing while carrying bad debt is mathematically a losing game. Clearing debt first frees up cash flow for future investments. It lightens your financial load and reduces your mental stress. Once the weight is gone, your money works for you. You are no longer running uphill with heavy ankle weights. A clean slate is the launchpad for real wealth. Fifth, you can watch your portfolio drop without panicking. You understand that market volatility is normal and expected. If a red chart ruins your day, you are overexposed. Emotional detachment is the ultimate superpower of successful wealth builders. You view temporary market drops as rare discount buying opportunities. This mindset prevents you from selling at the absolute bottom. You focus on the long-term trend, not daily noise. Your decisions are guided by logic, not adrenaline spikes. Now, let us pivot to the dark side of risk. These are the red flags that show you are gambling. First, you are investing money you cannot afford to lose. Your savings account is empty or dangerously low right now. This is the classic mistake of the desperate investor archetype. You hope a quick win will solve your financial problems. But hope is not a viable strategy for building wealth. When you need the money, the market will test you. You will be forced to cash out at the worst time. This cycle keeps the poor trapped in perpetual financial struggle. Never play with money needed for basic survival needs. If you cannot lose it, do not risk it. Second, you are carrying heavy, high-interest consumer debt loads. Credit card balances are compounding faster than your investments grow. You are trying to run while anchored to the floor. The interest you pay outpaces any potential stock gains. This creates a silent drain on your monthly net worth. It is far safer to secure a guaranteed debt payoff. Pay off the credit cards before buying speculative assets. Your future self will thank you for the clean foundation. Do not let debt drag down your financial future. Break the chains before you try to fly high. Third, you are making decisions based entirely on social hype. You see others getting rich and feel left behind. Fear of missing out is a terrible financial advisor. It drives you to buy at the absolute peak price. By the time you hear about it, it is late. The smart money is already selling to the hype buyers. If you do not understand the asset, stay far away. Never buy something just because it is trending online. Hype fades quickly, leaving late buyers holding worthless bags. True wealth is built in silence, not loud crowds. Fourth, you are putting all your capital into one asset. Lack of diversification is a shortcut to absolute ruin. Even the best companies can fail due to unforeseen events. Spreading your risk protects you from single-point failures. A concentrated portfolio is highly fragile and easily destroyed. Diversification is the only free lunch in the financial world. It smooths out your returns and protects your downside. Do not bet your entire future on one single card. Keep your eggs in several strong, independent baskets. Security lies in balance and intelligent asset allocation. Fifth, you are investing based on tips without research. You rely on friends, influencers, or anonymous forum posts. This lack of due diligence is pure financial gambling. If you cannot explain the investment, you do not own it. You are just hoping for a lucky roll of dice. Real investors spend hours studying the underlying fundamentals. They know the risks, the competitors, and the numbers. Blind faith always ends in a painful reality check. Take ownership of your research before risking hard-earned cash. Knowledge is the ultimate shield against catastrophic loss. To help you decide, let us run a quick test. This is the 3-step stress test for any risk. Step 1. Ask yourself what the worst-case scenario looks like. If that outcome ruins your life, do not take it. Step 2. Evaluate your backup plan if things go wrong. Do you have emergency cash and a stable career backup? Step 3. Check your emotional readiness for a heavy drop. If you pass all 3, the risk is calculated. If you fail even one, you are simply gambling. Remember, the goal is to stay in the game. The best investors do not take the biggest wild risks. They take the most asymmetric, well-protected risks possible. They protect their downside and let the upside work. This is how real, lasting wealth is built over time. It is a marathon of smart, calculated decisions daily. Do not let impatience ruin your long-term compounding journey. Build your foundation first, then take your calculated leaps. This is the secret of the world's wealthiest individuals. If you found this guide valuable, join our community. We share practical, honest wealth-building insights every day. Subscribe to Mr. Net Worth to level up your game. Let us build your financial empire together, step by step. Check your indicators before you make your next move. Secure your fortress, steady your income, and plan carefully. Avoid the hype, the debt, and the blind leaps. Your future self is counting on your decisions today. Make them count with logic, discipline, and absolute clarity. This is Mr. Net Worth signing off for today. Keep building, keep learning, and stay highly disciplined. We will see you in the very next video.